I think we have to dismiss, for the foreseeable future, any idea of a return to a gold standard currency. Um, Having said that, of course, Russia and China and others in Asia have been accumulating gold as part of their reserves, and also, I guess, in their wealth funds and various government accounts, which are probably we're not privy to. And I think the reason for this is really quite simple. She sees that the US is in a debt trap, the US government is in a debt trap, and that debt trap is going to drive interest rates higher.
In today's episode, Alasdair Macleod, head of research at Goldmoney, highlighted key trends in the global gold market. He underscored the geopolitical complexity behind the BRICS bloc's hesitancy to adopt a gold-backed trade currency, citing opposition from nations like India and China. While Russia strongly advocates for such a system to stabilize its economy, India's Keynesian policies and China's preference to benefit from Western financial missteps have slowed progress. For now, a gold-backed currency remains an aspirational concept, not an imminent development. Macleod emphasized growing global distrust in the US dollar, driven by America's mounting debt and fiscal irresponsibility. Central banks, particularly in Asia, continue to accumulate gold as a hedge against a weakening dollar and broader economic instability. Macleod framed this shift as part of a broader trend, gold's enduring role as a safeguard against the devaluation of fiat currencies, which are increasingly undermined by inflation and geopolitical uncertainty. He stressed that gold's rising price reflects not speculative gains, but the declining purchasing power of fiat currencies. As the West remains slow to address systemic financial risks, Macleod believes demand for physical gold and mining shares will continue to rise. With central banks leading the way, he suggests investors view gold as a critical insurance policy, well-positioned for long-term stability amid escalating global challenges. Now, we'll show you more clips, but first, check the pinned comment, especially if you're a stacker, as we have a massive Black Friday deal that every stacker should take advantage of, and hit the like and subscribe button so you do not miss out our recaps. Enjoy the episode.
The thing about the BRICS summit is it's highly political, and I don't think people really understood just how political it was. Um, I mean, the whole of this business of a gold-backed trade settlement currency started when, I think I'm right in saying, the Russian embassy in Nairobi put out a story that this was going to be on the Johannesburg agenda. It didn't make the agenda. And it hasn't made this agenda. And I think there are very, very good reasons why. I mean, India has reportedly been very much against it. And I can understand that. India tends to be Keynesian in its economics. And not only that, but it trades with both Asia and also the West. And to bring in a gold-backed currency of any sort risks destabilizing the fiat currency world. And India doesn't want to be in that position, nor does China. China has exactly the same problem. And China also has a philosophical approach to these things. She would rather we made all the mistakes and she just sort of sits there benefiting from our mistakes. That's been her strategy. It's sort of Confucian, if you like. You know, why interrupt someone when they're making mistakes to your advantage? And that's her approach. So she's just sitting on her hands and not interested. I think the only nation which has a clear benefit from a return to gold is Russia, because if she made the ruble a credible gold substitute, then gold would flood from everywhere. Where, I mean, in the West, its lease rate is 2%. The deposit rate of the Central Bank of Russia is around about 18%. I mean, what's not to like on that arbitrage? And that is what gets gold flowing from one center to another center. And I think, Russia is the only one in the BRICS which really has a very substantial and sustained trade surplus. It's not like China. China trades off her imports by exports, and where there's a difference, she'll go and sort of spend some money investing in infrastructure or whatever it might be. Russia is the one with the problem, and that's why she got the hair running, I think, back in Nairobi ahead of the Joburg summit. I think we have to dismiss, for the foreseeable future, any idea of a return to a gold standard currency. Having said that, of course, Russia and China and others in Asia have been accumulating gold as part of their reserves, and also, I guess, in their wealth funds and various government accounts, which we're not privy to. I think the reason for this is really quite simple. She sees that the US is in a debt trap, the US government is in a debt trap, and that debt trap is going to drive interest rates higher because who are the marginal financiers? Basically, it's the foreign nations and their institutions who already have, according to the Treasury tick figures, something like 32.5 trillion tied up in dollars currency and also underlying financial assets. So, it's sort of looking like end of the road. Now, when these guys see that Donald Trump is almost becoming a shoo-in for the next president, they're now looking at a Trump-led America, I think, with some trepidation. I mean, they have heard the headlines. They have seen the headlines. Trump loves trade tariffs. Trump wants to cut income tax and corporation tax, which basically means that the budget deficit will increase before the benefits of that, if they ever come through, come through. So you can see from a foreigner's point of view, they're not buying gold, they're dumping dollars. And that's what's really been happening. And this also explains why it was that when Putin made it clear on the Friday before the BRICS meeting that a gold-backed trade settlement currency or a trade settlement currency of any sort was not on the agenda, gold continued to rise. It was not reflecting disappointment, if you like, that this much hyped idea was suddenly going to happen. What it was, I think it was an increasing concern in Asian circles, certainly, that the dollar is in a debt trap. And the consequence of that, in the absence of an administration prepared to face up to it, the consequences are dire. And I think that's roughly where we.
In today's news recap, silver gains as investors continued to assess the latest economic data. Silver prices gained 0.42%, bolstered by expectations of a Federal Reserve rate cut in December. Core PCE prices in October remained aligned with market expectations, maintaining hopes for a 25 basis points rate cut, which supports silver by reducing the opportunity cost of holding non-interest-bearing assets. Meanwhile, robust Q3 GDP growth, strong personal income and spending data, and historically low unemployment claims highlighted the resilience of the U.S. economy. Initial jobless claims remained steady at 213,000 for the week ending November 23rd, below market expectations, reinforcing the strength of the labor market. Globally, silver faces its fourth consecutive year of structural deficit, with a 4% decline expected in 2024, bringing the deficit to 182 million ounces. Despite a 1% increase in supply from key producers like Mexico, Chile, and the U.S., record industrial demand, recovery in jewelry consumption, and higher recycling will continue to strain availability. India's silver imports surged nearly tenfold to 4,554 metric tons in the first half of 2024, driven by solar panel and electronics demand, as well as investors seeking better returns compared to gold. Silver is showing signs of fresh buying, with open interest increasing by 11.4% to 25,927 contracts. Prices are finding support chart on the upside, resistance is pegged, and a move above could see prices testing higher highs. Now we'll show you more clips, but first, check the pinned comment, especially if you're a stacker, as we have a massive Black Friday deal that every stacker should take advantage of, and hit the like and subscribe buttons so you do not miss out our recaps. Enjoy the episode.
Absolutely, and finally, and credit being something with which isn't the final settlement and is always matched by a liability. Someone has the liability, and the situation as far as looking at the value of gold in terms of goods, services, and all the rest of it, is that its purchasing power is broadly unchanged over very, very long periods of time. I mean, I was looking at Diocletian's Edict of Maximum Prices, and the value of these prices in gold, some of them were very, very close to what we see today. I mean, there are others which have dropped out. I mean, we don't have slave markets anymore, for example. There are others where prices have actually, either increased substantially or decreased substantially. But generally, the purchasing power is pretty even the whole way through. And if you look at the purchasing power of gold with respect to West Texas Intermediate oil, I mean, I think I'm right in saying that back in 1950, oil was round about $3.50, $3.53 a barrel. Today it's sort of like 70, but the price in gold has just sort of motored along. I mean, it's gone from 2.5 times what it was then to maybe 50% of what it was then. This is considerably less volatile than any fiat currency. Now, the point I'm trying to make is that when you look at the relationship between gold and dollars, for example, really what you're looking at is not the purchasing power of the dollar so much. Well, you're not looking at the gold price so much, but you're looking at what's happening to the paper currency, the dollar. And the thing about gold is it is international. It is internationally money. It's in everybody's common law, whatever the government propaganda says. This is why, if you want to vote against the dollar as a foreigner, then your natural place to go actually is to go to gold. And I think that's what's happening. It's not that, say, the PBOC is buying gold. It's more a question that they're selling dollars or they're reducing their dollar liabilities. And that's the way to look at it, I think. That being the case, the only thing that's going to turn around this relationship is a very, very sudden turn in US economic and monetary policy. But so many people will get harmed by that. It's very hard to see that being a deliberate act of policy. But until that happens, I'm afraid the purchasing power of the dollar, and in Steve's word, the least dirty shirt, that's going to continue to decline, and it's going to take the other currencies with it. The other currencies are worse than the dollar. I mean, you can see that in terms of what's happened to the gold price in those currencies. And you look at the euro. I mean, the euro as an international currency seems to have declined in terms of its use in transactions, while the dollar has held relatively steady at around about 50% of all estimated transactions. This is the point I really try and get over is that what is moving is it's not so much the gold price, it's more the value of paper currencies. And that should alarm us.
And that's Alasdair Macleod's take on the evolving role of gold and the BRICS nations' ambitious plans to challenge the global financial order. What do you think? Do the BRICS nations' master plan for a gold-linked system hold the potential to reshape the global economy, or are the obstacles too great? Let us know your thoughts in the comments below, and don't forget to like and subscribe for more daily recaps. Now watch this video right here because it's a perfect fit for you. I'll see you on the other side.